Chevron has reached a deal with the Offshore Alliance Union, ending the strike action at its offshore gas sites in Western Australia, which threatened 7% of global LNG supplies. I caught up with energy analyst Saul Kavanich a little earlier.
Far more painful and protracted negotiation process than we saw with Woodside only a month or so ago. Chevron's played harder ball and actually got to the point where we had industrial action undertaken for the best period of almost 2 weeks. We got to the point where we had rolling 24/7 strikes, and it was all building up to this precipice of the hearing scheduled today to seek a forced arbitrated outcome by Chevron. But I think what you saw yesterday in the wake of the mediator releasing a statement saying that the parties were close, that really made it quite unlikely that Chevron could win its hearing today. I think better terms were tabled. I think what we've got now is an agreement which has achieved the tier 1 status the unions are after, particularly in terms of remuneration, job progression, job security, and rostering. And this really brings to a close this saga, which has seen a few hundred workers in high-vis overalls offshore Western Australia bring European gas traders to their knees, causing tens of billions of dollars in global gas market movements. And now we're going to see that risk premium come off and markets return to more normal levels. And we're not going to have global eyes on these strikes from all over the world worrying what it could mean for global energy security anymore, which is ultimately a good thing for Australia because this was starting to cause a bit of a reputational risk for the country and our reputation as a reliable energy supplier.
Yeah, just explain how bad the rolling strike action had become at Chevron's LNG facilities. Was it really impacting global LNG prices?
So the threat of the disruption was impacting prices. So we saw a risk premium being added to global LNG and European gas prices, but we didn't actually ultimately see any supply actually get disrupted. So this has all ended without a single drop of gas supply being lost into the domestic market of Western Australia and very little actually being lost to the international market. What's happened since the wake of the Ukraine war last year and the withdrawal of Russian gas supply is markets just on edge. The mere threat that these strikes could cause a material gas supply disruption is what caused prices to rise. The supply disruption actually never occurred. Both parties ultimately got to the point where they've reached this agreement without it materially impacting global supply.
Yeah, do you think Chevron maybe came to the realisation that the unions were just simply not going to budge on some of their terms?
I think it was starting to become clear that the ability of Chevron to cut short the union's leverage via the hearing today was probably they weren't going to win that. And that time was on the union side. The longer they can drag this out, the more it was going to impact Chevron's bottom line. And ultimately, after causing a bit more pain, a bit more protracted process, you come to this outcome. It is likely that the final deal here is probably not quite as generous to the unions as it was in the case of the Woodside deal, but it's probably still more generous, for example, than what the unions agreed with Shell. So it's all within the range that was expected. It's just been a kind of longer and perhaps needlessly protracted and painful process to get here.
Yeah, so you mentioned that in the past month or so, Woodside have come to a deal. Chevron have agreed to a deal with workers. We know Shell had its own issue with workers last year. Are there any other major gas companies still in labour disputes in Australia or expected to come up in dispute over the next couple of years or so with potential EBAs and bargaining?
So the bargaining is now over for most of the offshore LNG projects in Australia. So that should see some stability here for at least the next 3 to 4 years. But there's 2 things to consider. First of all, there is still scope for industrial action at the Northwest Shelf LNG plant. We had the agreement with Woodside on the offshore, but not on the plant itself. So that's a possibility. But the second thing here is the unions have ultimately been very successful in their bargaining over the last 18 months. They've had some material wins. And that's probably going to see a growth in union membership across the industry. And that could also enable some more industrial action over the course of the next year on some smaller projects, some oil projects, and within the contractors. Remember, not just with the project proponents like the Woodsides and Chevrons, but the contractors underneath them where membership is likely to grow.
Saul Kavanagh, oil and gas expert. Thanks so much for coming on the show today at such short notice.
Thank you.